Welcome to podcast 4 of the Whyfield Podcast, and today I'm with Roxanne, who's my co-director, and today we're going to be talking about all things digital. So we've already covered off some of the choices you might need to make when you're starting a business and some of the things you need to consider, and today we're going to recap a few of those along with some of the things that you already can file digitally and things that are moving into a digital age in the coming years. So Rox, MTD for small businesses, there's a change on the horizon. It keeps getting pushed back, doesn't it?
It does, yeah. I think it was originally set to be 2024.
Yeah, possibly earlier.
Maybe even earlier, and that got pushed back during COVID times. And then it's now coming into play April 2026.
Yeah. And this is around digital reporting for your income tax, which at the moment you can already do through your self-assessment online. But this is a more regular, isn't it? A quarterly reporting requirement.
Yeah, a quarterly update that you need to send to HMRC with details of your income and your expenses. And at the moment, we don't know whether that's a really detailed income and expenditure breakdown because it's still kind of within draft legislation, but it should be coming out fairly soon so that we can kind of let our clients and the wider world know what reporting requirements they will have. But at the moment, it is a report of your income and your expenditure for your sole trade business.
So a mini tax return,
yeah.
Quarterly tax return, for example.
Yeah, but within those quarterly reporting, you don't have to make any accounting adjustments.
Okay.
They're going to be done within the final one at the end of each year. So it's not like you need to ring your accountant each quarter and say, what are my accruals, my prepayments? So you can just submit your income and your expenditure for that period.
Yeah. And so that's going to involve making sure, and I think we've been harping on about this through the podcast series, is around having up-to-date, real-time digital information using cloud software of some sort.
Yeah, absolutely. So most businesses at the moment, they might use a spreadsheet, they might keep a cash book still. I mean, there are some out there
since I've seen a cash book,
some out there that still do it. But actually, making sure that you're using compatible software, it not only makes it easier, it means that you'll also be compliant.
Yeah, and gives you that information as well for making decisions. So taking away the compliance side of things, actually having that information is helpful.
Knowing what you need to
owner.
Yeah, absolutely. Knowing how your business is doing, whether you've got the cash to be able to buy something or do something else or expand into something, into another area without actually having access to that information is really difficult.
Yeah. So at the minute, those businesses that are VAT registered are used to a quarterly requirement to report, and they're used to their VAT return. So this is looking at those individuals that don't have any other reporting requirements currently except their end of year tax return. Yeah. And even sort of going down towards landlords that their only income is from rental properties, they're going to be scooped up in this next lot of legislation changes, aren't they?
Yeah. So from April 26, it's going to be individuals and landlords with a turnover of more than 50,000. So that might exclude some landlords if they only have one or two rental properties. But if you have a large portfolio, then you're probably going to get caught in the first kind of trawl of making tax digital for income tax. And then from April 27, that threshold lowers to 30,000. So that's going to then scoop up a whole heap more kind of individuals within that bracket.
Yeah. And I think the idea eventually is that everyone will just be filing up-to-date information. And with the likes of Xero, of QuickBooks, online banking, which is now almost made traditional banking obsolete. Everybody does their transactions online, they're logging in for things. That information is already out there in a digital format. So this kind of feels like it's just bringing all of that together into one place. So it's not really a huge change to what is already being done. It's just reporting it in a slightly different way, in a slightly more regular manner. Yeah,
absolutely. And actually, if anything, it will give people more insight into what tax they're likely to pay at the end of the year, to start saving for that if they need to, rather than kind of getting towards the 31st of January and being like, oh no, now I have this huge tax bill to pay.
Yeah. And we don't know yet whether there'll be requirements for payments on account and things. We really have just kind of got this date, haven't we? And we're working towards it. And our job at the moment is to get as many of our clients onto software as we possibly can. Yeah. So even if they don't have to be yet, that they are. And it's quite nice to say that almost all of our clients are digital in some way. Even if they're not using it themselves, we're using it on their behalf and they have the access to it. And I think that's kind of our priority, isn't it? Is to make sure that we've got as many people transitioned into digital accounting before that date as possible.
Yeah, absolutely. It just means that for them, it's no change really, other than once they give us their information, we actually just do an extra step in the background, rather than it being kind of just we'll do it and then give them back the information. Actually, we're just going to tell HMRC about it at the same time.
Yeah.
And obviously for those that, maybe we don't do stuff regularly for them, we should be able to help them get to the point where they are using the software confidently, with a bit of training, so that they can then do those reports themselves. And the softwares, obviously we mainly use QuickBooks and Xero, but they are starting to release to accountants the little insights of how that's going to work. So I've seen a few little tutorials on what that will look like for us being able to submit on behalf of.
Yeah, definitely. And because we work quite closely with Xero and QuickBooks, they do quite often give us those sort of online, don't they? Sort of sneak peeks behind the scenes. So we are up to speed and can pass that on to our clients.
Yeah.
And so there's already so much that can be done in terms of a digital format. So some of the other things that businesses might come across that we've probably not touched on so far in the podcast series for online filing. So Companies House, for example, your accounts at year end. Pretty much everyone now can submit their year end accounts, all types of entities.
All types of entities, apart from CICs, who can still report via paper if they're micro entity. If they're full accounts, they can go digitally as well. So just a really small kind of bracket, really. That isn't. They still, at the moment, if you need to amend your accounts, done by paper, but that's the only kind of time where they expect anything to be delivered by paper. In terms of accounts, and everything else now you do share exchanges and updates to PSC notifications and confirmation statements are all done digitally.
Yeah, all done through your online account, which again you can do yourself, or your accountant can have that authorization to make those changes, or your solicitor might even be making those changes for you if it involves shares, additions of shareholders.
Yeah, quite often solicitors will do that.
Yeah. And other things that are filed, so we've got your self-assessment tax returns, which was just spoke about, and when we recorded the last podcast, we're just coming to the last of the filing of those for the tax year. But your corporation tax returns, they're all done online as well, aren't they? So the tax returns that are directly linked to a limited company, so the business tax.
Yeah, absolutely. So they are filed digitally along with the self-assessment tax returns. HMRC have actually now brought out a new thing where you can now tell them that you've started to trade through your limited company online. So you can basically fill out an online form that says, I've started to trade. Some people do set up limited companies before they're ready, so they might make that transition from being a sole trader to a limited company, and aren't quite ready to trade yet, but they want to secure the name, so they register their company early.
And they file dormant accounts.
And they file dormant accounts. They told HMRC they're not going to start trading yet, but now you can online. You can now tell them that you've started to trade. Before you had to make a phone call or write to them, which would take forever
get stuck on hold to HMRC.
Yeah, so that's a fairly kind of new thing that's come out in the last few weeks. So.
And even HMRC have launched an app, haven't they, so that you can find your UTR, for example. So if you are a sole trader and you've got that 10-digit unique taxpayer reference, it tends to be the thing that people lose, forget, misplace most often. And up until recently, that again was a call to HMRC and waiting 10 days for that to be sent out to you in the post. And now that can be found online as well.
Yeah,
so we're very sort of quite quickly actually not having to be on hold to HMRC and seeing that most things can be already actioned with online filings. Other things other registrations. So all of the registrations for becoming an employer, becoming VAT registered, they're all online. Registering new limited companies, closing them down, all of your tax returns, your VAT returns. So now we're just looking at this sort of final step in terms of those smaller businesses that HMRC might not hear from year to year are going to be a little bit more involved.
Yeah, absolutely.
And in terms of going back to landlords, because I know we sort of touched on it and that they're going to be scooped up in this next lot, they might not have considered themselves a business. So they might have let MTD and cloud accounting pass them by up until this point.
Yeah, absolutely.
But it is a trade, isn't it? It is a business effectively.
Yeah, definitely. You still have obviously reporting requirements within your self-assessment tax return. So being kind of dragged into the MTD scenario just means that you are going to have to be a little bit more prepared with your income with your records, you're going to have to really start to think about, actually, I need to do this on a regular basis rather than, it's all right, I don't have to wait till the end of the year because my tax return's not due yet, because the tax return basically will become obsolete.
Yeah. So this will include people that might have full-time jobs, but also rental properties on the side that they receive an income from. So again, they
will be required to report that income quarterly. They won't be required to report their employment income, or if they have dividends or something, for example, but they will be required to report their income from rental quarterly.
Yeah. And that's because HMRC are already receiving their employment income from their employer.
Yes, so, through RTI.
Yeah, through RTI. So that's already, again, a filing that I always think that's only a few years ago, but I think it probably was, about 10 years ago now, where we moved to RTI. So actually, instead of reporting employees' pay at the end of the year, that is now done every single time they're paid.
And I think most employees probably don't know that.
Yeah.
They think, I'm employed, I don't have any filing responsibilities. Actually, well, they don't individually, but their employer does.
Yeah.
So actually, whilst they think, it's fine, I only have to do my tax return once a year, actually what's happening in the background, which they're not, necessarily aware of, is that monthly reporting is happening.
Yeah.
And obviously they're going to then be kind of caught in the quarterly reporting for their other income.
And they can log in online to see that monthly reporting through a personal tax account.
Yes. Yeah, absolutely. It's one of those things I always ask every client that I meet, do you have a personal tax account? And they say, what's one of those? And I'm like, it's something that's really, really important to have, actually, because you can see lots of really good information on it. It has things like your employment history, past P60 information, which actually when you come to do your tax return is really useful, because sometimes you've lost the one that your employer gave you. Absolutely. So you can download your SA 302s, which you'd need for a mortgage application. You can also see on there your pension forecast for your state pension, so you can check how many qualifying years national insurance you've got and how many more years you need to have before you can stop paying it when you're ready for retirement, which just feels like forever away. But
and you can catch yours up as well, just touching on it very briefly, that if you're coming towards retirement age and you're not sure if you've had enough years, maybe you've had some time off, sort of career break to have a family, or change in jobs, some small self-employment, that you might be missing a few qualifying years to get the full state pension. And you can find that information on that personal tax account, and then in some opportunities you can make the payments up, can't you? So you can actually make contributions so that you have paid enough national insurance throughout your whole working life.
Yeah, absolutely. And that's kind of a key thing as well. And it actually kind of links back a little bit to landlords as well, because as a landlord, you don't pay what's class 4 national insurance on profits because it's treated as rental income. But actually what you can do is opt to pay class 2 national insurance, and that's actually the cheaper one, which is always the nice one to pay for. But as a landlord, you have to call HMRC and request that you fit into that category. So it's quite rare that people actually know that and that they can do it.
And there are loads of changes to national insurance happening since the last budget as well, with things changing, things being removed and statutory requirements changing. So it's worth just bringing yourself up to speed and having a look on that personal tax account and just ensure you haven't fallen out of it somehow.
Yeah, absolutely.
You're still filing. I guess other things in terms of online filing that we see that are maybe slightly more niche, and there might be lots of listeners that won't have heard of these things. So, for example, CT61s at the moment,
Still paper-based.
So that's
absolutely.
one that we're waiting for, aren't we? And they're when a business owner, director of a limited company has lent the business some money and they're charging interest on it. So that's a declaration to let HMRC know that they've got some savings income effectively from their own business. So it's quite a special sort of bit of tax legislation, isn't it?
Yeah, it is. And again, it's something that not everybody is aware of. So it's if you've loaned your company money, and essentially if that loan came from you personally rather than coming from a bank, the bank would charge you interest. So actually as an individual, you can charge your company interest. It can't be excessive, which would be lovely in most circumstances, but it needs to be like realistic. And that interest is then reported either on a quarterly or an annual basis to HMRC. And actually the company will deduct tax from that interest payment. And actually then on your self-assessment tax return, you need to declare that interest and the tax that you've paid on it, or you've had suffered on it.
So this is still one of those processes that's still quite manual and quite can be a bit onerous just to in terms of reporting, but hopefully it will catch itself up.
Hopefully, yeah. I mean, you can apply for a CT61 online now, which is great, and then they send them in to you in the post. So it's there's one step further, one step ahead.
And also looking at directors' loan accounts, and touching back on those, because it's something that we do get asked about quite a lot, because directors might take a small salary and then dividends, or they might use money from the business for something that actually isn't allowable, and therefore that becomes a personal spend, and vice versa. So we just discussed what happens if you've effectively lent the company money, but if the other way around and you've taken money out of the business that hasn't been declared anywhere yet, so it's not a salary, it's not a dividend, that gets treated as a director's loan, doesn't it? But the other way.
Yeah.
And the tax to pay on that is S455?
Yes. And that is a tax that the company actually pays on behalf of the director. So it gets tagged in with your corporation tax. And if your direct loan account is repaid at any point, so the next year or the year after, it's then reported on your corporation tax return again to say it's been repaid, and then you get the tax back.
So they kind of hold it on account to make sure that you do pay that business money back, and you're not just taking it out and not declaring it anywhere.
Absolutely. And there are other things to consider if your director's loan account is in that position, and one of those is it a benefit in kind?
Yeah.
Because there are rules around how much you can have taken,
and the interest rate that you're charging yourself the other way.
Yeah.
And if it is a benefit in kind, then that's going to go on a P11D, and that can be filed online.
Yes, it can.
Yes. And the sorts of things that go on P11D, so benefits in kind. So those are things that the business has given you, and employees can have these as well, can't they? So something that the business pays for on your behalf that actually is not wholly and exclusively for the use of the business. So employees might see this in terms of private healthcare, gym memberships,
dental,
company cars, those types of things. So that's declaring tax on the cash equivalent of that benefit, isn't it? Working out what that benefit would have cost you if you had to pay it out of your own money, your own wages at the end of the month, actually what it would cost, and declaring that. And effectively
absolutely. And that's actually now becoming more common to report that within the payroll. So within, like, when your employer does your monthly payroll, if you as a business owner, when you're taking things off of your employees, actually that's becoming more popular now to run it through the payroll rather than doing the traditional once a year submit a P11D.
And that works then because you're going to be paying that tax out of your wages every month in a much smaller increment than having a tax bill at the end of the year, which either rolls into next year's tax code, or effectively you've got to declare on a self-assessment tax return and pay a load of tax over just after Christmas, which tends to be. So P11Ds, they're online as well. Anything else you can think of that's kind of moving online or that's still paper-based at the moment?
I don't know. I don't know if there's anything else.
No, I think that this final piece of the puzzle with MTD and those sort of smaller individuals, at the moment you can still file a paper tax return, can't you? But you have to file it by
31st of October.
31st of October. Whereas if you're filing online, you've got until the 31st of January. So I think that that's going to be the next thing to go, isn't it? It's going to be that actually the paper tax return is gone as well, and that deadline will be removed.
I think, well, as soon as the MTD for income tax comes in, then the tax return itself is going to go. So you won't have that option to then file the paper return, because actually you'll need to be reporting quarterly. So you'll have 4 times that you report throughout the year. And currently there is a final submission and then like a final declaration, although at the moment they're in talks to make that one final submission. So rather than there being lots and lots of things to do.
Lots of submissions.
Lots of submissions. They're trying to minimise those down. So basically that will wipe out the paper tax returns or any tax returns.
Yeah, so. And that final submission will still allow people to be tax efficient and have those conversations with their accountant as we would sort of 9-10 months throughout the tax year, and say to them, right, what have you earned? What are your profits looking like? These are some things that you could do. You could invest into your pension. You could invest in assets. You could make investments into other businesses. And those kind of conversations can either happen more regularly so that they're discussed quarterly, but that final sort of year-end submission is where all of those sorts of things are still going to be able to be done. So it's not a panic that every quarter you've got to sit down with your accountant and go through tax planning, although that would probably be
that would be great.
Yeah,
actually,
that
if
would
we
be
could
great
do that
for us.
with lots of our clients, that would be wonderful.
But you're still going to have that opportunity, aren't you, to make
Yes.
those tax savings and make sure that you're as efficient as
absolutely.
you can be.
And I think actually what it will do is it'll make you as a business owner think about those things maybe a little bit more regularly, because you'll be putting in your income and your expenditure and you'll think, okay, that's my tax bill. That's not very nice.
That's looking quite big. Yeah. And rather than being like most business owners do, and you're just busy doing, you're busy being a business owner, you're busy in the thick of it, winning clients, selling the goods and the services, and not really thinking about the tax that comes out the end until the tax year's gone. So yeah, I completely agree that I think this is going to start bringing business owners into the thinking about things a little bit more regularly.
Yeah, which is actually really like kind of where we like our clients to be. It's something that we harp on about all the time, of actually, do you understand your figures? Do you know what they mean? Do you know how your business is performing?
Yeah.
They're actually going to be able to take it like a real interest, or they will need to take a real interest in that, because actually they have to report it.
Yeah. And as you said, that's what we love to do. We love to be able to discuss business performance with clients and say, look, this is where your business is at, comparables to previous years or previous periods, and so that they can kind of see progression or even identify if there's been a downturn and
the
before
reasons
it's too
why
late.
that is,
and understand.
and have some ways of saving. So like as a business owner, as you said, you're busy doing the doing. So sometimes you don't realise that your insurance has trebled in the last 3 years. And actually, isn't until someone goes, have you seen this? And then you go, actually, that's like a really, that's gone up loads. So actually, I should probably speak to someone. If you're looking at those
figures 18 months after the year end's finished, then it's too late. And you've already paid another 18 months of sort of too much of a cost. So again, being proactive rather than reactive. And I think that was a phrase that we used quite a few times in the first 2 podcasts around planning, cash flow, understanding your position, and just kind of being on top. So we're seeing this sort of Making Tax Digital and this digital evolution as a good thing, as an opportunity to sort of be able to share information and be upfront. So we're not seeing this as a scary change for our clients at all.
No.
I think with the MTD for VAT that came in, sort of started in 2017 until 22, we were way ahead. I think our clients were ready way before the deadline. So they actually didn't even know the deadline had started.
It was even a thing. They were like ready and prepared and already reporting in that way. So for them, it wasn't a big scary step, and hopefully it will be the same thing when this comes in. It's, we've got a couple of years now to really harp on our clients and be like, okay, we need your information. Let's go.
Yeah, let's keep talking
and actually,
about
we are quite lucky that we do have lots of our clients that already will give us lots of their information on a regular basis. But it will be reaching out and explaining the reasons why it's so important.
Yeah, why we're asking for it and why we need to see those things more regularly. And for us, digital is a natural place to be. Online is a natural place to be. Our office, we're pretty much paperless.
Yeah.
And so we're halfway there already.
Yeah, definitely.
Perfect. So I think hopefully that wraps up sort of where we are in terms of the digital age and the digital accounting revolution. No doubt you'll see the adverts on your TV and your smartphones and Instagram, socials and things about how that's changing over the coming years. And any questions that you might have, do reach out to your accountant or to us, and we'd be happy to help. So thanks for listening.